Thanks for joining us. I'm Marlon Bowling with you on a Wednesday as we get ready for our daytime session. And of course, all eyes on the USDA reports coming up at the end of this trading week. They'll come out on Friday at noon. All kinds of crop-related data, and here to talk about that and other things that are affecting the grain markets this morning. Let's go to the phone and welcome RichNelson of Allendale Incorporated. He joins us right now. He's from McHenry, Illinois, just outside Chicago. So, Rich, I'm looking at the news wires here. Finally, this morning, I see another report of soybeans sold to unknown destinations, about 260,000 tons. So, kind of a drop in the bucket, but at least we're having an announcement anyway.
Certainly right here, and also very happy to point out this is actually interesting here. We did see about 65,000 tons of that being old crop and 195,000 tons being new crop, the 2018 crop itself here. So interesting to see we're picking up a little interest on both ends of the spectrum here this morning.
We have some early estimates for the crop reports that are coming out this Friday. This is based on a survey of analysts around the country that was done by the Wall Street Journal. And for the corn and soybean production numbers, they are expecting to see corn production at around 14.56 billion bushels with a corn yield of an average guess of 175.2 bushels per acre. Soybean production expected to be 4.43 billion bushels with a yield of 49.4. Doesn't sound like they're going to be adjusting very much if that's the case on either one.
Exactly right here. I think a lot of people pointed out that on these trade guesses, roughly about a third of analysts suggested maybe smaller yields on corn, maybe two-thirds suggested higher yields, but the numbers, even the people who were calling for higher yield guesses, weren't very stretching at all. So the trade basically saying they see the crop roughly unchanged with the most recent numbers from USDA, and the trade's mindset, the big question is for us is going to be demand here.
Yeah, and you and I were talking yesterday about that here on this program, about the ending stocks numbers, and you're wondering how much USDA will go out there and adjust their projections for ending stocks, incorporating some changes to the exports over the coming marketing year here. You seem to be of the opinion that they're going to have to drop that?
You know, that's exactly right. Now, in terms of where we are compared with USDA's goal on the soybean export pace, we're already about 200 million bushels behind where we should be. And if this doesn't correct, we could be as much as 300 million bushels off by the end of the marketing year once August rolls around. So some big questions here for us really show, or I'd say the big question here is, what type of cut USDA will make. As it stands right now, most analysts don't expect much of a cut, but certainly that could grow in the coming months here.
Now, we get a quarterly grain stocks report, and this would be actually a measure of the grain on hand, correct? As of December the 1st, do you expect to see much in the way of market-moving information in that?
And I got to say, actually, based on history, this is where the big questions remain.
Really?
For corn specifically, 40% of our product is feed residual, and we have no clue on a weekly or monthly report what the usage is of this. So this black hole of usage, which is so large in corn, can often have some big market-moving effects for us here.
All right. Now, another one we're going to get is the winter wheat seedings report that'll be coming out on Friday. And this is one that is obviously going to get a lot of attention among the wheat producers and wheat traders out there. They expect about 1 million fewer acres on hardwood winter wheat this year. Is that correct?
Exactly right. That's actually a great point here as far as this wheat discussion. I think this actually could be an interesting point for us because a lot of our discussion for us on the 2018 acreage discussion is more corn or less beans or what mix as far as that goes. We got to point out that winter wheat will be cutting out, in this case, over I believe it's 1.3 million acres lower than last year. So that could certainly give us some interesting discussions on the corn soybean side in the coming weeks.
Okay, we'll come back in a moment and we'll talk about this livestock trade, which had a bit of a surprise at the end of the day yesterday. We'll find out why, maybe, when we come back. Well, we're back here with RichNelson of Allendale Incorporated in McHenry, Illinois, and this time we're going to talk about our livestock trade. Very interesting trade yesterday, Rich, where we had, of course, now you have to think back a little bit here. Last Friday, we had the nearby live cattle contract going limit down on the close. And then on Monday, we opened up and we had follow-through selling. Then on Tuesday, we opened up higher and then sold off and went lower for much of the day. But then right before the end of the day yesterday, it came back and it closed higher again. But I want to take a look at our livestock summary from yesterday, and this is very, very interesting here. We had a rally in the futures trade, but yet we had cash cattle sales yesterday on a live basis reported to be from 118 to 121 per hundredweight. And then on a dress basis, from what I can tell, it looks like the range was 191 to 193 yesterday. I guess both of those would have to be at least $1 to $2 under what they had seen on Monday. Am I wrong in that?
No, that's exactly right. So we did have some continued problems yet again here on the cash cattle side, some further losses there. I think what the market is kind of looking at, though, is the next few days, we talked about this transition of temperatures and whatnot. We're going to be back to below freezing temperatures across the plains here once we get into the weekend here. For instance, I'm looking at Amarillo, Texas right now, 23 degrees for some lows again on Saturday. That's not too threatening. But then you look at these guys further north, for instance, once you get into Nebraska and whatnot, you will see some below normal temperatures over the coming weekend. So in my opinion, this is probably an issue where we fell based on the rising temperatures, and we peaked, of course, yesterday in the plains. Now we're going back to a drop here with a good 30-degree drop in about 4 or 5 days.
Well, I'm glad you brought that up because I heard one specialist yesterday saying that they expect temperatures in Kansas to get down to 0 at least by this weekend. Cattle don't like that. They don't handle that very well. If it's cold and then it turns off in the 70s for a few days and then goes right back down to 0, especially if there's snow or freezing rain or ice or something involved in that can really be hard on cattle out there.
A very good point. And we always talk about how we need precip to get these cattle weight problems going, but what you mentioned right there is exactly true. Fluctuating temperatures are certainly not welcome at this time of year on the weight gain discussion here, so certainly true.
But how is it that you have the cash market continuing to go down? And that's 2 days in a row where it was lower than what they had sold for before. Yet we have the beef cutout values continuing to go higher. They were higher again yesterday afternoon, 29 cents higher on choice cuts. They were up 32 on selects. Then you had the futures rallying, but how is it the Packers were able to come in there then and buy at such lower prices this week ahead of the game, real early in the week? It seems like a bit of a surprise that the Packers let go of that many cattle that early and not willing to wait for higher prices.
That's actually very true, especially on an early week issue where a lot of people suggest that maybe the cattle feeders should have had maybe a little more pricing power than they did. On this one, I would simply suggest perhaps that futures are looking at things obviously maybe a few days ahead. We're on the cash side. We're probably looking at things as they stand right now in the current moment here.
On the other hand, you look at the lean hog trade, and they were basically treading water yesterday on the close, but you have your pork carcass cutout values and your belly market sharply higher. Again, the bellies were up 5.78 yesterday afternoon. Carcass values up over $1. And I know you were talking about some problems in Asia that may be impacting pork demand.
No, that's exactly right. On the South Korean discussion here, we have a large-scale avian flu issue, which is yet not abated. So that's still one issue. And on top of this, we have the February 9th Olympics here for South Korea. So we do have two interesting things which have given us a good bump on the export side. Very strong, very good issues to note. On the negative side here for today, we do have one packing plant pulling back from Saturday kill plans, mainly because of this rising cash hog issue has not yet caught up with the lack of real rally on the wholesale pork side here.
All right. Well, thanks for explaining that, Rich. Rich Nelson of Allendale, Incorporated in McHenry, Illinois. So, Mark, there you have it. The table is set.
Get in about 5 minutes, and we'll get that bell ringing and
right.
start the day. Thank you, Marlon.